Managing your finances can sometimes be overwhelming. The majority of the time, our focus is diverted by necessities, the likes of work and family responsibilities. Still, it's crucial to take the time to develop a long-term financial strategy. An economic recession is one of the best situations to illustrate this point. Unfortunately, we also have no control over a recession, but we do control how we react to one and prepare for it. Taking some, if not all of these steps to recession-proof your finances before the next financial crisis hits will make a significant difference in how well you'll face the next recession. So get ready as I reveal to you the 9 money tips you should use during a recession. But before I get into it, please give this video a big thumbs up for that YouTube algorithm. Tip number 1. Have an emergency fund. An emergency fund is money you've set aside specifically to help you get by during tough economic times. Saving for an emergency fund is essential when preparing for a recession because when the economy starts faltering, our jobs and our income may be in jeopardy. However, having emergency savings will give you a safety net to fall back on so you can ride the wave and come out of the recession on your feet. Regardless of whether your hours have been reduced, you've lost your job, your business isn't making any money, or you made some bad financial decisions. Ideally, you should save up to 3 to 6 months worth of your income if you can. However, I believe that you should have at least a year's worth of income saved up, so you won't need to use credit when times are tough and money is tight. A mistake that frequently haunts people for years after the recession, and listen up friends, is using credit as a safety net. Most people don't anticipate the need for a higher income than they currently have to pay back the money they borrowed, plus interest, during hard times. Debts from difficult times are always higher than expected because they always last longer than you would anticipate. Most people don't have any extra money because they're accustomed to living off their entire paycheck. To pay off the debt with their current income level, they must either significantly reduce or significantly increase their lifestyle. It's time to start setting aside money for emergencies if you haven't already. That is before a downturn in the economy occurs. Tip number 2. Take a look at your spending. Suppose your friend Frank is going through a challenging financial period in his life. He has huge medical and personal debt that he is struggling to pay off, and he could really use some extra money. The easy way out would be to get a loan, but this usually comes with consequences. Therefore, Frank has to explore other options. In Frank's case, and probably a lot of folks in the same situation as Frank, it's worth looking into where you can cut back on any expenses that are not necessities, like rent, food, and utilities, while taking into consideration how much you're spending. Continual expenses like unused subscriptions or gym memberships should also be considered. According to research, people have had a tendency to forego at least one recurring payment every year, and some estimate that they waste over $50 each month on recurring changes for items they no longer require. People frequently have subscriptions to streaming services they forgot they had subscribed to, and gym memberships they never use. It also goes without saying that you must have a clear understanding of your spending, where your money is going to begin your savings plan. Fortunately, there's a ton of technology available today to make managing your finances simpler. They also enable you to know how much you're saving and where to cut back on, enabling you to have a clear understanding of your spending and be able to plan yourself financially. One of the apps includes Truebill. This app is valuable in that by connecting it to your bank accounts and checking your transactions for recurring payments, it enables you to cancel unwanted subscriptions. After the app discovers your current subscriptions, you can also select which subscriptions you want to keep and which ones to cancel. This is just one option. You can also find other apps to your liking and preference. Tip number 3. Don't stop networking. As the old saying goes, your network is your net worth. And as cliche as this might sound, the old saying actually carries merit. Networking is the informal social exchange of knowledge and ideas among those who share a profession or a particular interest. Networking frequently begins with finding one point of agreement. Professionals use networking to widen their social networks, learn about employment opportunities in their fields, and become more informed about news and trends in their industries or the wider world. During a recession, businesses tend to make cuts, which may result in losing a sizable portion of their workforce and money. Either way, you can still rely on your industry contacts to help you find employment if the employment tanks and you find yourself unemployed. Hence, one of the benefits of networking. The ideal time to meet your coworkers and network with business contacts is at company events and parties. Be confident in making introductions and even exchanging a few business cards. When jobs are hard to come by, those friendly acquaintances might prove to be a lifeline. Always remember to sell yourself when in such meetings. Tell them what you do best and what areas you have expertise in. After all, when an opening comes up, they just might remember that guy or gal that made a memorable impression. Tip number 4. Establish your budget and pay down your debts. During a recession, when jobs are hard to come by and money is tight, having debt tends to be a burden, and those high debt payments will only increase your stress levels in a situation that's already stressful. Therefore, you should evaluate your financial situation and all of your pending payments while creating a strategy to pay off your debts. It can be challenging to pay for daily expenses during a recession, let alone debt repayments, which can lead to an uncontrollable increase in your debt. High debt loads are dangerous because even a tiny change in outside circumstances could make it difficult for you to make your payments. Even though you might be able to manage expenses at the moment, a job loss or an increase in interest rates, along with banks tightening credit limits, could make things worse. Thus, setting up a budget that accurately reflects the money coming into your household and where that money is supposed to go is the first step to successfully paying off your debts. In addition, having a budget will help you identify spending areas you can reduce, so more of your money can go towards paying down your debt if you aren't attacking your debt as aggressively as you could, or worse, adding to your debt. And you'll still be able to manage your money better while still living within your means. Tip number 5. Downsize to a more frugal lifestyle. On the one hand, if you're a person that loves minimalism or has always wanted to try it, then this tip might be perfect for you. And on the other hand, if you don't give a hoot about it, then this might be uncomfortable to do. So friends, let's discuss this point. And also, if you're getting value from this video, do me a favor and hit the like button. And while you're at it, YouTube says that a lot of you guys watching aren't subscribing, so help me hit 1 million by subscribing to the channel. Thank you in advance. You see, of course, downsizing is hard to do at first, but if you want to live comfortably, with a recession in progress, it's a sacrifice that's worth making until things get better. The ability to live frugally and downsize can be a great strategy, because it will prevent your savings and prevent you from having trouble adjusting to a new way of life during a recession. Contrary to popular belief, leading a frugal lifestyle doesn't involve squeezing every last penny out of your budget and depriving yourself of the things that make you happy. Rather, it involves making conscious decisions about your purchases that reduce costs while barely affecting your way of life. There are many ways you can start living modestly. If you currently have 2 vehicles, think about getting rid of one and taking the bus or train instead. You could save a ton of money each year just by making this decision. If owning 2 cars is necessary, think about trading in one of them for a more fuel-efficient subcompact car to reduce your gas expenses. Additionally, you might consider downsizing your house or apartment, cutting back on your grocery budget, and reducing your cell phone plan. The key is to make sure the cuts you're making aren't too drastic. Otherwise, it won't be easy to maintain in the long run. The secret to living through a recession is learning how to make do with less, and eventually you'll realize that the effort was worthwhile. Tip number 6. Start working on a side hustle. So if you guys didn't know, I have a side hustle, personal finance, or as I like to call it, financial education and time management course, all packaged into one coming out soon. And if you'd like to grab it when it comes out, put your details in the link down below. Plus, I'll give you a free value pack PDF guide. A side hustle can supplement a full-time job with additional income. With the additional funds, it might be easier to pay bills, put money away, or help with other expenses. The extra income might also assist in turning your side gig into an expanding business. Having a second source of income can make the difference between being able to sleep at night and worrying about money when times are tough at work. In times of prosperity, continue to bolster your savings by starting a side business. A small business or part-time job not only earns you extra money, but also acts as a backup plan in case the recession results in layoffs at your primary job. Channeling your interests or hobbies into a second income could give you a safety net, whether you bartend on the weekends or do occasional iPhone repairs. In the course, I go into a lot of detail on this topic, so keep an eye on when it comes out. Tip number 7. Diversify your investments. It's very important to diversify your investments. A downturn in the economy could be disastrous for your finances if you have the majority of your assets invested in the stock market. And it's because of this that diversifying your investments is so important. Make sure your investments are distributed across a variety of sectors and even asset classes in your investment portfolio, so that they will be less affected by market fluctuations, and your losses won't be as severe. You can put your money into a variety of different investment vehicles to diversify your portfolio. For example, real estate is a popular investment that typically increases in value over time, whether you're buying a house, a condo, or even land. Likewise, bonds have frequently been a good way to generate income, while investing in stocks is an excellent way to help your portfolio grow, particularly the stock market index. Also, consider investing internationally because geographic diversification can lessen your vulnerability to economic downturns. The trick is looking for what works best for you and what you'll be willing to put your money into. Tip number 8. Get rid of high-interest credit card debt. As prices for everything from groceries to gas and transportation have risen significantly, many consumers are turning to credit cards to make ends meet. Although they can be useful in a pinch, credit card debt that is not paid off in full by the end of the billing cycle can quickly add up. Even though credit card interest rates are already notoriously high, keeping a balance will increase your costs. For example, when gas prices rise, many intelligent people panic, even though they frequently have no idea how much they spend on larger purchases. By applying for a balance transfer credit card that gives you time to pay off your balance without accruing interest, you can stop interest from building up. Eliminating your high-interest debt now means you'll have one less debt to take care of if times get tough financially, which is helpful if you're concerned about an impending recession. In addition, a credit card with a 0% APR can help you finance new purchases while providing you with plenty of time to pay off your balance before interest is charged, if you find that you're currently dependent on credit to get by due to the high cost of living. Tip number 9. Focus on the big picture. Although it's wise to set aside money for emergencies and pay off debt, other aspects of maintaining your finances might not be as obvious. Because of the stock market's erratic behavior, you might experience an alarming rate of income decline during a recession. You see, during a recession, the stock market may decline by 40%, but that doesn't guarantee recovery. When times are tough, be ready to lose money and know when to buy new stocks as prices decline. At the height of a recession, selling off all of your inexpensive stock could cost you more money than you anticipated. Avoid taking any hasty actions that might put your savings at risk. Although no one can really predict how the economy will develop in the upcoming months and years, the ongoing global challenges are a prime example of this. And friends, there you have it. The tips I've shared are simple ways to position yourself for success, regardless of what the future holds. Choose the ones that are most effective for your particular financial situation and implement them right away to stay ahead, while keeping in mind to live within your means. Until next time, have a great day.